Well, it was an interesting day in the stock market here today. We did get some GDP news out with the US GDP growing by about 2%. That was a little bit under what the expectations were. We also saw some news first thing in the morning from Amazon buying out a online pharmacy retailer, so that sent a lot of the drugstore related stocks lower. But despite that, we did have a bounce back day in the markets generally speaking. So we're going to review our posture and a few other things along with a trade idea here. Let's go ahead and get started. Welcome to the Market Outlook video. I'm your host, Brandon Van Zee. It's June 28th, 2018. First of all, if you're new to these videos, we'd like to welcome you in. We are appreciative of having you in our audience today. Remember, you can subscribe to our YouTube channel. You can also leave comments. And in our description area on YouTube, you can sign up for our daily email that will allow you to see when we post these videos and also give you a heads up on which stocks are giving you bullish and bearish clusters or overbought, oversold, however you want to describe that. We're also on Twitter. Make sure you're following me there. My handle is @BrandonVanZee. The Market Scholars handle is @market_scholars. And we're also on Facebook, so make sure you check out our group at that web address you see in the logo in front of you. All right, with that, let's go ahead and dive into some market analysis here. As you can see, I've got the S&P 500 pulled up in front of us, and we were up 0.62% here today. That was about 16 or 17 points higher on the S&P 500. Despite that big move up, we continue to have a bearish intermediate term posture. Remember, that's kind of the prioritized posture that we use for this particular video. Remember, we use the market forecast indicator that you'll see down below here to help us establish our posture. And so as you can see, this green line has now been falling for about 4 days in a row at this point. So that's why we do have that bearish posture. But it is good to see the bulls win one day here. I know it's been kind of a tough go of things, particularly for certain sectors. I know the financial sector has really been beat up here recently as just one example. So it'll take a little bit of time for us to kind of unwind this bearish position right here. But it's always got to start with at least one up day. So maybe we're heading somewhere with our first one here today. Of course, we did have a very long bullish run going into this bearish condition, so not the end of the world either way. Let's go ahead and take a look at our 4 grid here. And this is chart 4B. Remember, you guys can follow along if you are premium Market Scholars subscribers. Right up here in the upper left, you'll always be able to see what chart that David and I are using in our presentations. Remember that the premium subscriptions are currently on sale. That sale will end Saturday night at midnight. So if you're thinking about joining us, make sure you do it before then, because starting next week, our prices will be going up, and we don't have any exceptions around that. So, but as you can see here, this is our 4 grid, and this allows us to see all 4 major indices here in the United States all at the same time. And hopefully you guys can recognize right now that the background colors of all 4 of our charts here are pink. What that signifies is that we do have bearish postures across the board in all 4 of these indices. Now, you will notice a slight difference in the pink shading down here in the Russell 2000. That's a lighter pink right there, and that tells us that it's not a strongly bearish posture. It's a weakly bearish posture. So in other words, it could easily flip back to a bullish posture from one day to the next. Whereas some of these others, especially the Dow Jones, you know, it's been in kind of a bearish, a strongly bearish posture here for a few days now. In fact, things have gotten so bad for the Dow, we nearly got a oversold cluster signal down here. Remember, we get those signals when we have the green, the blue, and the red lines all in the lower reversal zone at the same time. Oftentimes, those can be reversal types of patterns as well. We're not there yet, so we don't want to get ahead of ourselves, but keep an eye on that. Be on the lookout for a potential cluster setting up for the Dow Jones here in the days to come. But otherwise, the rest of the charts look pretty much the same. Like I said, bearish postures and mostly hanging out in the lower ends of the charts as far as the market forecast charts are concerned. All right, let's go ahead and take a look at our next chart setup. This will be our 3 green arrows chart setup here. And so this is where we're taking a look at 3 different technical indicators outside of the scope of the market forecast indicator. So the 3 technical indicators here are going to be the 30-day moving average, the MACD, and the stochastics. And so when you see the pink background color, like we see with all 4 of our charts right now on this particular chart setup, and this is chart 4C, as you can see up here in your upper left, Remember, you're going to get access to all of those charts that we use. There's about 26 of them as part of your subscription with us for those of you that sign up. But anyway, we do have pink background colors in all of our charts right here. So yet another indication of the bearishness that has kind of settled into the marketplace here recently. Now keep in mind what David's been mentioning in several videos here recently, which is this is, from a seasonal perspective, typically a weak part of the cycle. Usually end of June is pretty ugly. Things do get a little bit better starting in July seasonally. Now we don't know if every year is going to shake out that way, but we just know from a historical perspective that has been the case. So maybe we get the calendar to help us out here starting next week. We'll see. But right now we do have 3 red arrows across the board on all of those charts. All right, let's take a look at our longer term view now. This will be chart 4D. This is our 1040 crossover method. All these charts are 3 years in length, and each one of the candles represents 1 week in time. What we're looking for here on this particular chart setup as far as an indication goes is a crossover of the moving averages themselves. The orange line, as you can see, is the 10-period exponential moving average. The blue line is the 40-period exponential moving average. What we're looking for is the orange to cross down and through the blue line. Since the Dow has been the weakest of the 4 indices here recently, it makes sense that it is the one that is the closest to going to a bearish posture. Now, depending on how long you've been watching these videos, you may or may not realize that that's actually considered a pretty big deal. You can see that the last time we had any sort of a posture change on this particular setup was way back here for the Russell 2000 in June of 2016, early June. So in other words, the last time we got any signal on any one of these 4 charts here was over 2 years ago. So this is not something you see on a regular basis. So if that does occur, and we do get that bearish crossover there on the Dow, you can be sure that David and I will be pointing that out to you. Let's go ahead and take a look now at some of our 12 grid analysis. And so this first one will be our intermarket analysis here. And this background color kind of goes back towards the market forecast indicator as far as the posture is concerned. So when you see the green background colors on these charts, that means that it has a bullish intermediate term posture. If you see a pink background color, it means that we have a bearish intermediate posture. So on the first set here with the intermarket analysis, we often have a mixed bag. It's set up that way by design. Remember that these are going to track a wide variety of asset classes, even beyond just the stock market. So let's see what's shaking here today. I did notice that the preferred stocks are having a nice little breakout here recently. Remember, preferred stocks oftentimes kind of track the bond market. In other words, when interest rates fall, like you can see right here with TNX, interest rates have been falling here for the last couple of weeks. We often find a inverse response in yield-oriented investments like preferred stocks. And so you can see preferred stocks are actually touching a new 3-month high at this point. So keep your eye on the preferred shares out there. We don't really talk about them a whole lot. It's kind of a boring, quiet corner of the market, but certainly a time and a place for everything. You can see that the TLT, which is the U.S. government long bond here, isn't quite to a 3-month high, but it is within spitting distance. You know, we've got kind of a resistance area here that was formed back in late March, and then once again here in late May that we're contending with right now, but another couple days to the upside, and that could very easily be broken too. When we look at some of the other charts, the VIX was down today, so the VIX was down about 6%, but remember that's a pretty quiet day for the VIX. Nothing really to write home to mom about on that one. As we look at some of the other charts, US dollar continues to be very strong. So this is one that we've continually pointed out during these market outlook videos, and remember that causes reverberations across the entire financial markets, depending on whether you're looking at commodities or foreign investments, different things like that. In fact, I talked a lot about the foreign investments in my strategy lab review, the second quarter review and the third quarter preview video that I did last night for those of you that are premium members of our website. Hopefully you've watched that already. But anyway, the US dollar continues to be strong. So right now that trend is in place, as long as that is in place, I would expect a little bit of difficulty within the foreign markets around the world. You'll notice here that the gold market has really been taking it across the chin as well. In fact, gold's gotten so out of hand to the downside, we now have a couple of oversold cluster signals right here. Same thing can be said for agricultural commodities. Remember, that's going back to what's happening with the US dollar. Most commodities out there are priced in US dollars, so when the US dollar surges, the price of those commodities goes down. One of the exceptions to the rule here has been crude oil. Crude oil has been kind of dancing to its own tune here recently. Notice that big breakout in crude oil that we saw here in just the last week or so. So we might review that theme here in just a little bit. But before we do, let's look at a couple of other charts. Let's take a look here at our next 12 grid. In this case, speaking of the foreign markets, here we go. And so as a reminder, the US dollar is strong. Most of these investments should be weak, and that is indeed what we're seeing right now. Notice that most of these foreign ETFs that we have in front of us here are shaded pink. There's only a handful that are green and therefore have some bullish posture to them. One of those is Mexico. You can see Mexico finally trying to reverse course. This was a really ugly move from April to basically middle of June that Mexico was making, but nice little recovery taking place right there recently. So keep your eye on that. There might be some value there in Mexico that could be realized, but for the most part, a lot of the other areas of the world really struggling. Brazil just getting crushed. Look at Brazil, down 26% in just 3 months. That's what that little percentage means right there to the right of these 12 grid charts. That tells you how much that security is up or down over the time period of the chart, and these charts are always 3 months in length. So, you know, to see a major world economy down 26% in just 3 months is a little bit eye-popping. Remember, the conventional wisdom is that when a market is down 20% or more, it's in a bear market. So in other words, Brazil has been in a bear market just in the last 3 months. And as we look at some of the other markets out there, it's pretty ugly over in India right now. We're down about 5% over the last 3 months in India, breaking to fresh lows today, although there might be a little bit of a hammer candle that's setting up right there today with India. So keep your eye on that. China has been blitzed. You know, China's down about 9% over the last 3 months as we enter into the third quarter here. And then down below here, South Africa really been struggling as well. South Africa's down about 18% in the last 3 months. Many of those are getting some of those oversold cluster signals. So it is possible that reversals are going to be setting up here. But considering their track record in the last 3 months, you probably want to be a little bit more cautious around those. Maybe only use speculative money or just position size a little bit smaller than you normally would. Let's now take a look here at our last 12 grid, which is our U.S. sectors 12 grid. And so as you can see, the S&P 500 does have its bearish posture right now, and therefore most of the 11 sectors that follow it are also bearish, but there are some exceptions to the rules. Notice right here that we have energy. I talked about oil prices surging here in the last couple of weeks. That has allowed the energy stocks themselves to hold up better than most stocks in the market. Now, I wouldn't call this a beautiful chart by any means, but at least it's holding up and retaining that bullish posture there for XLE. Consumer staples, you know, they're doing reasonably well. We talked about that today in my dividend growth investing class. In fact, for those of you that want to have a sample of my dividend growth investing class, you're welcome to send me an email. My email is brandon@marketscholars.com. I know many of you are still on the fence on whether you're going to join us at Market Scholars or not. And as I mentioned before, our premium subscription prices will be going up starting on July 1st. So you only have 2 more days to make your decision. So if you want a sample class, for those of you that are long-term dividend-oriented investors, feel free to send me an email either tonight or tomorrow. I'd be happy to send you a link back so you can kind of see what we talk about in those classes, how we go through our analysis, and how we make our decisions to build out our dividend portfolio. Of course, consumer staples has been a key focus for us in that particular class over the last several months, simply because their prices have been beat up so much that they were receiving these cluster signals, and we had a nice little recovery out of the staples here recently. So that retains its bullish posture as well. As we look over here at the utilities, not to be outdone, we've got another defensive sector that's holding up reasonably well there. And then a kind of a surprise sector, not a lot of people talking about, real estate companies doing really well here. And I might talk a little bit more about that in the Market Outlook video tomorrow. So hang tight on that. Now, before we get to our trade idea, let me come over here to the internet here briefly. I did want to show you that I updated the Strategy Lab portfolio. For those of you that are premium members of Market Scholars, you now have access to that, not only to the quarterly review video that I posted last night, but also to the strategies themselves. Remember, there's 50 different strategies that I'm paper trading against one another and tracking the performance of to see where we have strength and weakness within the marketplace. One that I thought we would focus on here tonight is 21Q. This is the S&P 500 top performers in the strongest sector in the last 3 months. You can see that last quarter, that one was up about 12.8%. So as I go down here to 21Q on my list, you can see how that's structured and set up for the portfolios going into the third quarter. So this is the new composition of that particular portfolio. But some of the names on here are actually shaping up nicely. So if we look at Devon Energy as one example, let me pop back over to the charts here briefly. Let's just pull up chart, I don't know, 4A on this one, and we'll pull up Devon. You can see Devon just went to a bullish posture as of today. That green line started pointing back up again. This has been a very stable looking chart right here. Again, chaotic markets recently, but there are some areas of interest, and this could be very well one of them. Another name on the list that could be worth looking at, let's take a look at Anadarko. That's APC right there. That's also going to be in that portfolio for this particular project that I'm working on, that also has an accompanying class every Wednesday night called the Strategy Lab. Well, this is Anadarko right here. Notice that Anadarko also has a bullish posture. In fact, we're getting what's known as a bullish intermediate confirmation signal on Anadarko here today as well. Let's take a look at maybe one more. How about Newfield, NFX? And so Newfield also has a bullish posture with that green line pointing up. Almost got a bullish intermediate confirmation signal here today, but you can see it's steady Eddie as she goes to the upside here. Not a lot of breakdown in that chart price at all. So anyway, just wanted to quickly remind you guys of that. The other thing that I wanted to point out is here on Twitter. Make sure you're following me, at Brandon Van Z is my handle. I did tweet this out about Starbucks here today. Starbucks went down to $48 per share today. In fact, this was one of the stocks that we did talk about in my dividend growth investing class today, for those of you that will ultimately listen to that recording. But anyway, Starbucks did go down to $48 per share, and it gave its very first 3% dividend yield here today. So as most of you are aware, Starbucks has really struggled share price-wise in recent sessions. You can see that the stock price has fallen from about 57 down here to, at one point today, 47. Well, take a look at that candle here today. Most of you probably recognize that candle as what's known as a hammer candle. Not only that, but preceding it was 3 straight oversold cluster days. Now, in addition to that, if I were to come over here to our dividend stair-step chart, let me just pull up 3A on this. I'm going to pull up Starbucks now and zoom in here. Notice that with it falling as low as it did today, it's in alignment with this blue stair step over here, which tells us it now has a 3% yield. Some financial programs are not picking up on that yet because they just announced their dividend increase last week, but they did raise their dividend from 30 cents to 36 cents. They made that announcement last week. So if we were to get our calculator out here, take 36 cents times 4 to annualize it, $1.44 is what they'll be paying in the next year in dividends, divide that by the $48 that I mentioned on Twitter, and that is your 3% yield. So anyway, kind of interesting because that is the very first time Starbucks has ever yielded 3%. Obviously a pretty substantial number given the fact that the S&P 500 is yielding slightly less than 2% right now. Normally Starbucks is thought of as a growth name, but it is starting to slowly become more of a value slash dividend type of a play. So what I thought we would do here for today's trade application is something a little bit more speculative. You know, obviously this isn't going to be the right type of trade for everybody because it is a stock chart that is struggling right now, but because it is starting to hit some of those valuation metrics of interest for some of you longer term folks out there, what I thought we would do here today is buy a long term call. In other words, it's called a leaps. For those of you that are familiar with the vernacular there. And leaps allow you to go out several years in time, but still be able to leverage your money. So you wouldn't have to necessarily buy the stock outright if you didn't want to. Now remember, if you are buying options instead of the stock, you are not entitled to the dividend. So be aware of that. This again is a speculative trade, not necessarily one that we are locking down for the buy and hold dividend portfolio here in this particular case on the Market Outlook video itself. But what I thought we would do is go out to January 2020, and you'll notice that Starbucks, of course, the world's largest coffee company, does have fairly liquid options, even way out there in January of 2020, which is 568 days away. It's a long time from now. But if you think this is temporary, as far as their problems that they've kind of seen here recently at Starbucks, and you think that the company will be back on track within a couple of years, then one way to kind of place a bet, so to speak, on that is to buy a call option. And so what we're going to do here is we're going to buy the $45 call option. Now notice we're probably going to pay about $7.65 for that, so that would be $765 if you buy one contract. Now if you want to know what your break-even price is on that, you basically just add that premium price, $7.65 to $45 right there, and basically come up with your break even right around that $52.65. And so in other words, if you believe that Starbucks's price will come back up here to the $60 range at any time in the next couple of years, then that leveraged call instrument that you're buying in this case should benefit if that were to unfold. So again, we're going to take a very, very small dip our toe in the water speculative trade here by just buying one contract to see how it shakes out, and if we decide to sell some premium against it later, why, so be it. But for right now, we're just going to buy one call option on Starbucks with the expectation that income investors might very well start stepping into the stock around these levels. So we're going to buy one of the $45 strike price in January 2020 for $7.65. We'll go ahead and make that a good till cancel order to make sure it gets filled. At least if it doesn't get filled tomorrow, give ourselves a chance the following days as well. So again, our break-even price there is $52.65. So if you think that stock will be up above those levels in the years to come, that might very well be a way to take advantage of it. Let's go ahead and send that paper trade off. All right, well, I want to thank you for joining me here tonight. I'll be with you again tomorrow, as well as David's been working furiously on getting our website all in tip-top shape, ready for our public launch of Market Scholars on July 1st. We look forward to joining many of you for that venture in the years to come. Many of you have already been attending our classes. And again, if you want to see what a class looked like for a dividend growth investing class, which doesn't have a focus on options like we often do here in these videos, feel free to send me an email, brandon@marketscholars.com, and I can certainly give you a sample of a class that I taught today based off of that. So with that, I want to wish you all the best with your trades and your investments. Goodbye for now.